Chapter 13, Long-Term Liabilities. Introduction. Chapter 13 explores the world of long-term liabilities and bonds. It discusses the distinction between current and long-term liabilities and delves into the fundamentals of bonds, including their purpose and characteristics. The chapter also provides insights into the process of preparing and issuing bonds, as well as the ethical considerations related to bond fraud. Learning objectives. By studying this chapter, you will be able to 1. Understand the difference between current liabilities and long-term liabilities. 2. Explain the purpose and characteristics of bonds. 3. Describe the process of preparing and issuing bonds. 4. Recognize the ethical considerations associated with bond fraud. Key points. Long-term liabilities are separated into current liabilities and long-term liabilities on the balance sheet to provide stakeholders with information about liquidity and solvency. Bonds are financial instruments issued by companies directly to investors, promising to pay a specified rate of interest over a specific period. Bonds have a fixed interest rate that remains constant throughout the life of the bond. The process of issuing bonds involves underwriters who specialize in issuing financial instruments. Bonds are often used to finance long-term projects or activities. Bond fraud is a significant concern, and investors should be cautious of scams involving fake bonds. Debt financing involves borrowing money that will be repaid on a specific date in the future, while equity financing involves selling part of the business to obtain funds. Debt financing requires timely interest payments, and the interest paid is tax-deductible, while equity financing does not require repayment and allows for reinvestment of revenue. Real-world application. Understanding long-term liabilities and the issuance of bonds is crucial for businesses and investors alike. For businesses, issuing bonds can provide a means of financing major projects or activities. Investors, on the other hand, need to be aware of the risks associated with bond fraud and exercise caution when considering bond investments. Additionally, the choice between debt and equity financing can have significant implications for business owners as it determines the ownership structure and financial obligations of the company. Conclusion. Chapter 13 provides valuable insights into the complex world of long-term liabilities and the role of bonds in financing business activities. By understanding the differences between current and long-term liabilities, as well as the fundamentals of bonds, you can make informed financial decisions. The chapter emphasizes the importance of ethical considerations in the bond market and highlights the potential risks of bond fraud. Additionally, it explores the options of debt and equity financing, showcasing the trade-offs and implications of each. Overall, this chapter equips you with the knowledge and understanding necessary to navigate the world of long-term liabilities and bonds, empowering you to make sound financial choices for yourself or your business.